morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we continue with financial reports and earnings reports from various companies, and again, we're focusing on the manufacturing sector today, and we're looking at two companies who, one, depending on who you speak to, would make essential products for the Trinidad and Tobago and wider international community, and we're talking about National Flour Mills and Angostura Holdings Limited. Now, both companies would have reported increases in their revenues. However, that would have channeled into to varying degrees into increased or flat profitability. So let's take a look quickly at National Flour Mills. And for that 9-month period ended 2020, National Flour Mills, or NFM, reported an earnings per share figure of 17 cents, which was a 467% increase from the 3 cents recorded for the prior comparable period. Now, revenues were up just around 2.1% from 304 million to just around 310 million. Gross profits were up a much more significant 29.6%, and that's testament to improved cost management strategies, with gross profits increasing from around 66 million to 85.2 million. Overall profits for the period increased from $4 million to a whopping 20.1 million for that 9-month period. Now, in terms of revenue and revenue growth, we can see that it has been topsy-turvy for NFM over the past 4 comparable periods. And in the 9-month period of 2019, there was a 6.3% decline in revenues. However, in the 9 months of 2020, that would have been met with an increase modestly of 2.1%. However, we are still off the highs of around 324 million in the past few comparable periods, where revenues were a little bit higher in contrast to where they are now. Now, we would have spoken about cost management, and the company has been doing a lot in terms of cost containment and management strategies. And we can see that having some rewards for them in the current period. Now, in the 9-month period of 2019, gross profits margins and operating as well as profit before tax margins all fell quite significantly below what we would call more traditional operating margins and profitability. And that has resumed or recovered to somewhat more traditional levels, with gross profit margins being around 27.5%, which compares favorably to the 28.6% and 30.3% recorded in prior comparable periods. And we can see operating and profit before tax margins have moderated or recovered to some degree to more traditional levels, again, when compared to the 9-month period of 2017 and 2018. So certainly the 9-month period of 2019 was somewhat challenging for NFM, and they would have taken measures to arrest those declines and correct some of that performance. Now, is it a case of significant improvement or just reversion to the mean? Well, when we take a look at the price to earnings ratio historically of NFM, it would suggest more of the latter. And for the 9-month period of 2017 and 2018, the price to earnings ratio of NFM was just around the 8 level, the 8.0 level. That would have spiked to 37.3% on release of their 9-month earnings results in 2019, and has now moderated to just around 10.5 times. So at a price of $2, NFM is trading at that 10.5 times multiple, which is below the sector average of around 18.5 times, but in line with its own more traditional trading levels, and does offer investors a dividend yield of 1.5%, which is slightly above the manufacturing sector average of 1.1%. So on the basis of moderately improving revenues and good cost containment initiatives, but still an overall lackluster operating environment, Bourse maintains its neutral rating on NFM. Turning quickly to Angostura Holdings Limited, and for that 9-month period, the company reported an earnings per share figure of just around 39 cents per share, which was pretty much in line with the 39 cents reported in the prior comparable period. Now, revenues positively did increase a whopping 7.1%, which is quite commendable under the current performance issues of the global pandemic, from 536 to 574 million. However, there was an increase in the cost of sales, and that translated into fairly flat gross profits, being around that $270 million level. And overall profit for the period was just flat, basically at 80.7 million, which compares almost identically to the 81 million recorded in the prior comparable period. Now, when we take a look at revenues by segment, we can see that there was pretty good growth in both the rum and bitter segments, with the rum segment increasing just around 13.2% and the bitter segment just around 4.5%. from 2019 over 2020, that 9-month comparable period. Bulk, other, and LLB did suffer some notable percentage declines, but rum and bitters are by far the largest segments for Angostura in terms of overall revenue generation. Now, a lot of that would have been driven by product innovation and new product launches. In the case of white oak, sorrel, watermelon, and coconut, I believe, as well as in the bitters segment, there would have been the launch of the new cocoa-flavored bitters. So that would have certainly helped excite people with respect to the Angostura brand. And I think there are more product launches coming, if I'm not mistaken, that Angostura sorrel and bitters coming up soon, just in time for the Christmas season. When we take a look at profit margins, we can see that it continues to be a challenge in terms of turning every dollar of revenue into profits. And for that 9-month period of 2020, the profit after tax margin fell to 14.1%, which doesn't compare too good to that 15.1% of the 9-month period of 2019. So it means that on a profitability basis, there have been some challenges to Angostura in terms of converting every dollar of revenue generated into profits for shareholders. So it's going to continue to be a struggle. However, they would have incurred some above average costs in the current fiscal year, and hopefully that revision or moderation of costs in subsequent periods will help their profitability, both at the operating and overall profit after tax levels. So at the current level or current price of $16.75, Angostura is trading at a price to earnings ratio of 24.3 times, which is above the sector average of 18.6 times. And in terms of dividend yield or cash flows to investors, that dividend yield is just around 1%, pretty much in line with the sector average of 1.1%. On the basis of product innovation or continuing product innovation and their seemingly resilient revenue, even under conditions of a global pandemic. But again, notwithstanding the challenging operating environment, Bourse maintains a neutral rating on Angostura. Well, that's it for this week's edition of the Bourse Report. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com, where all of our research is absolutely free. You can also catch us in today's business section of The Guardian. So until next week, have yourself a wonderful investing week. This has been the Bourse Report.